Hi everybody, John Seville here from Acorn Wealth, and happy Options Expiration Friday. I hope it's been a wonderful week for you. It has been for us. Of course, we had some great volatility here as the S&P 500 dropped through that 1920 area we've been talking about, right down to our 1820 target. Of course, those levels were illustrated by the Fibonacci extension from this leg that was previously set from August 8th up to the high here of September 4th. And if you drew that extension there, you can see we've come down and knuckled through those areas, coming to 100% extension down at 1820, and have had that sharp bounce up. Now we've bounced right back up into the 22.3% Fibonacci extension. 23.6% Fibonacci extension. And also the 9-day moving average, and we have seen a bearish day so far. We've gone up, but we're right down in the lower half of the range. Of course, the close on the candle yesterday, being Thursday, October 16th, was pretty mediocre at best as well, closing in basically the middle of the range of the trading, which doesn't indicate that strong reversal that we've seen in previous recoveries, where we closed right at the top of that recovery candle. So, what's next? The market could do anything. We have a very important range that's been set here today. The low on 1864 so far and a high of 1898. If we break lower than that on Monday, I'm expecting that trend will remain negative for the next week or two. If we break positive and above the 9-day moving average, then that will indicate a momentum recovery rally from the S&P 500 and to start looking for those longs. My bias is towards the negative side. I don't like the way these two candles have acted. I think we're going to pull back down to that 1820 level at least. So I'm focusing on some reversal trades. Now, of course, we're in option season, so be wary of option announcements. We had one of our picks from earlier in the week. We picked Netflix as a short. You can watch that video on our YouTube channel. We said, look, hey, the 430 and 440 puts might look good as a potential short criteria to add to your watch list. Those were up almost 1,000% after that not so surprising drop. Money flow was terrible. We were in an ascending wedge bearish pattern. This thing was breaking down even before it broke. So looking for things like this is what's on my shopping list for today ahead of the close. So the first thing that caught my attention was Away. These are competitors to Airbnb. Of course, Ebola is not a great thing for people wanting to take holidays in other people's houses necessarily. Now, so technically, this looks like an interesting short. It's I'm looking for potential shorts that are rallying into resistance. You can see Away has broken down. Its money flow has gone negative and is moving up into that resistance area underneath the moving average. Volume up yesterday was 1.72. Volume up today has only been 837. So the volume really hasn't carried through at all. We're looking at basically half that volume, if that, in today's movement so far, with only half an hour left. So I'm looking at that as a potential short, kind of in this zone where it is 31.50 up to 32, and I'd expect that to drop down to at least where this smart money support level is, which is around 28.30. So we're looking at basically a decent $4 potential drop from where we're at, which would be over 10%. So there's Away. Now we have a look at the next one. Of course, Twitter, also looking bearish. Its money flow has started to drop. It has not been able to really hold its rally. Of course, it reports earnings on October 27th. And so we've got a bit of a trend line. It's a bit of a cross here when you look at the systems of control. And I'd be focusing more on that. You can see that the moving average has really held this up for quite a while. Bit of a system of support here. That's failed. It's broken down. It hasn't really enjoyed the rally that many other stocks have. And this looks like it's under resistance. I mean, it's got a $50 to, say, $50.80 resistance line above it. And this could be a potential stock play, could be a potential options play. I'll certainly be looking at it as a potential earnings play closer to October 27th. But I'd be looking at some of those potentially like $48 puts on Twitter. And if you have a look at what those are currently at the moment, those are priced at $48 puts are priced at looking at $1.11. So we're looking at $1.11 on the ones expiring next week. And if you go out a little bit into November, those $48 puts here are pricing at you can see the different prices there, the weekly expirations, about $3.25. Yeah, there you go. So about 331. Sorry, 331, 325. Okay, the next one is IBM. And if we have a look at IBM here, we've got an excellent kind of opportunity for a trade. IBM reports on Monday. Now, if you have a look at the grand scheme of things, you actually have a head and shoulders pattern building here on the macro scale. And you can see that if that head and shoulders pattern continues to break, you can see it has broken that potential slanted neckline, which would suggest a target much lower of potentially 165. So having a look at the 180 puts, they're currently priced at $2.82. And we'll just bring those up. It might have actually dropped a little bit since then. So there you go, there's the 180 puts expiring next week, 276. So that's a potential earnings play on options if you get a big surprise like Netflix. Of course, always illustrate your caution. Option trading can be very risky and it can expire worthless, of course. So always consider that. But there's a potential one as well. And finally, we'll have a look at one long actually that I was watching, TRS. I couldn't help but look at it. It's been very resilient, has actually not really followed the market trend at all, has just continued to follow its moving average up, and this I think has a potential to rally up from where it is at 26.57 up to this resistance point here, where the gap down point was, which is right there at 28.87. So about a $2 potential gain, so around 8%. So hopefully those help, and we'll of course be looking for a very exciting week ahead. So of course do make sure that you like our YouTube channel, and if you are interested in taking a trial of any of our services or attending any of our live webinar workshops, simply visit acornwealthcorp.com. Happy trading and have a great weekend.